Good evening, all. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up, your weekly edition, and we are now on the week end of April 6th, Friday, 2024. Wow. You want to see something? Look at the video, up $50 today, back to $877. You can see how the markets are going through here. It's one after the other. Pretty wild day, actually. The stock indices were up, but the market is looking at what? We had a big week in GDP, PCE, and my take on the PCE is it's still showing that very sticky inflation. I don't understand where people are still talking about June, July rate cuts. There's a minority of them now. Most have pushed out their bets to September if there's going to be one. But if the data stays like this, I'm going to ask you why. The economy's still growing. Are you watching how many companies are beating earnings? I mean, it's near 80% again. We just had one of the biggest weeks that we get in a quarter, where you get 178 companies reported so far, and we got a bunch coming yet. You got your monster NVIDIA right around the corner coming at you. Tesla got another piece of bad news. Now the government's all over them for their safety driving, their autopilot talk that they're doing. We'll find out more about that. It just happened today. Copper's had a heck of a run as it's made the paper with attempted takeovers of the giant BHP going after Anglo-American. The first bid was turned down, but you knew that was going to happen. Microsoft acting just great. There seems to be, I was watching CNBC, the fight today. Would you rather own at the same 34, 35 to 1 price earnings ratio, Microsoft or NVIDIA? And the argument was brilliant on both parts, pro and con. Very, very good today. So that's where I think you're at. Now, this is a big week. You get the quarterly refunding out of the Treasury announcement on Monday. The Fed goes into its two-day meeting on Tuesday. We get the announcement by Fed chair as to what the policy is going to be on Wednesday, then the press conference. It culminates on Friday with the U.S. jobs reports, okay? I don't see how the jobs report comes out really weak and starts trending down. Given everything I've seen so far, I don't see it. Now, we'll get an idea because we get ADP's numbers, we get Challenger Grace. You always look at all the culprits, JOLTS numbers. You'll get all these things coming out now, and you want to pay good attention to them to get a feel. But the market has gotten through that. So as we look, I'm going to switch to MasterCard. Now, last week we did eBay. The chart after this will be eBay, so I keep up with it. And that's what I try to do. I rotate. So MasterCard's going to report this week. I can't imagine with the consumer spending the way they are that Visa, MasterCard, all these companies don't do pretty good. You've come down on the weekly chart. You've been in a correction of actual bear action. Lower highs, lower lows, but to what number? Right to the support. How often do you see me on these charts tell you, start plotting the 18-week, the 18-day moving average of closes? Now, some of you want to use the 20 or the 21. There's no right and wrong. I like the 18. I come from a commodity background, and in that we learned the 18. And when I went applying it to stocks, and I spent years trying to move with 20s and 21s, I used to buy a service that would tell you which one's working better for the market, and they would computerize it. I didn't find it worth the cost of the service at the end of the day. So I stick with this one, and I'm in the ballpark. This is where I thought the reaction would go to. The bias has stayed up. What defines bias? If you're over this number on a closing basis, your bias is up. If you're under it, your bias is down. It's a filter. So the filter's on the swing line. I had a sell signal in the swing line, but the bias is up. That's the signal. Come out of any long positions you have. A correction is likely to take place, and the culmination would be hitting that 18-week average. And from there, the game starts fresh. When I look at where the market was, it wasn't the Bollinger top that caused it. You had hit those early, but then you made higher highs. It was simply the weight of the market, and it was this. It was the loss of and this is why I love this. If you haven't taken my enhanced Bollinger Band course, this is your stairway to try to get momentum to lead price. If the red line closes under 79, the odds are this market's going to make a run to the 18-day average or the closest main moving average under that market. And you can see just what it did. Went right there, did its job, and now both numbers, well, there's one of them still over 70. When it reopens on Monday, my guess is it'll get under the 70 level because the weight of the market's been coming down. It's how the math should work. And it won't be in overbought territory. So now the market's getting interesting. On eBay, you know, I was looking for this market to stay strong. It has. I thought it would have trouble, as we discussed this before on last week's show, at the 100-week average. It did. The market broke down, and now it's come back. So the week before down, now it's challenging again. Does it have the power, and is it going to get the earnings to kick through that and make a run to the higher number? That's the big question. At this point, the bulls have control, but they're probably lightening up their position on a move back to that 200-week. In KRE, I'm not a fan. The long-term charts are number one, bearish. Number two, why would I want to own a regional bank? They're the guys with the big exposure to malls that aren't working, office real estate out in the suburbs, different areas. I'll let somebody else be the hero with that. You know, there is, don't get me wrong, there's cherry picking going on in the REITs and so on that probably work for some of these people. And not every building's in trouble. You know that, and I know that. But the ones that are give major exposure to these regional banks. MCHI has run, and I think that upper Bollinger Band is a problem now for the market. That's my own opinion on it. I think that this is the area where the market will have trouble. It's overbought. And right now on these China's pop, I'd be very careful. I'd be telling my clients to lighten up big time. In the industrial sector, you lost the bullish embedded reading. So let's go take a look at it. When did it happen? So here's the week of the 12th. You didn't lose it then. Here's the week of the 19th. So I'm looking for price and the 18-day average to get together from there before the market goes over that high. Didn't do it yet. I still think it's coming. And energy. So on the energy, as long as you're embedded, I'm favorable. Now remember, XLE is the big boys, the Conocos, the Phillips, Schlumbergers, you know, all the refiners, everything in here. I don't see anything on this chart unless the red line closes under 79 to tell me you can't go back up to 99.33. We did see Chevron and Exxon report. Both missed their earnings. But if you dive in, you're going to see both were in maintenance levels, and that's important. You know, you do in America because, number one, we don't have that many refineries. Number two, we convert over. It's a seasonal pattern of moving from winter blends to summer blends, and you did it right when those earnings is part of it. So I think that was what hurt the earnings. Could I be wrong? I could. But I don't think I am. I've seen this. I'm used to that game where it pulls back, and then obviously now they're ready for whatever the summer's going to bring on. You've got the higher highs, higher lows. Lose that reading, I'll change my mind. Until then, I still am looking at 99.33. In the dollar, why would I be anything but bullish the dollar right here? To me, the dollar reigns supreme. The yen hit a 34-year low against the dollar now. The euro's dropping against the dollar. I don't see the dollar. I see us as the last man standing. If you go, remember as kids, we'd have the chairs and you'd go around and somebody gets caught standing. They couldn't get to the chair fast enough. We're going to be the last guy standing, okay? They'll all be out or we'll be sitting. It's going to be that game. Trust me. In the gold market, I'm still bullish, okay? As long as I'm seeing there's inflation and price increases and the Fed not going up in rates, the market can push the rates higher. We could get a surprise on Monday if there's big numbers in the Treasury quarterly refunding needs. But barring that, you don't know. And I don't know what the Treasury is going to say. But believe me, I'm on the lookout. On SLV, you were over the upper band. You're pulling back. And unlike gold, you never embedded. So you're pulling back into correction territory. Okay, I do not think up here it's worth owning. In Eli Lilly, we had covered this before. I was looking for a correction as this market started backing off. Right here. Watch, I'll go one more week. You didn't lose the embedded reading. You did there. I think price right here is going back to the 18-day average to regroup at that point, a spot to be out in longs. I think it did its job pretty neatly, don't you? Uber, same thing when you lost the embedded reading. So if you don't learn how to work with this, and you could do this yourself on your charts, it really starts teaching you so many different things, and it keeps you out of harm's way, all right? I didn't say go short. I said you had to be out of longs. There was no sell signal above the 18-day average. The correction was already underway. In uranium, I keep reading in the news how uranium stocks are back in favor. Well, they most certainly are. They have been. You had one correction down here. You got oversold. You turned back up. And ever since you recrossed the 18-day average, you've had the pattern of higher lows, higher highs. But this is a profit-taking area, the upper Bollinger Band, in my opinion. And last, Meta. Meta did nothing wrong. They have to spend on this a lot of money in order to get the AI going for the next X amount of years. So the market didn't like that. I get it. This is not their goggles. And that's what I want to call these, like Apple, where it's going to change the world. I have no faith in those things. I didn't believe in Vision Pro. And if you'll watch already, they've cut production of them. They're cutting what they're putting into them. The world's not ready for us to go back. And it reminded me, my first portable phone, where you'd carry it over your shoulder with your battery pack, and you would have your phone with you. We had a country home, and that was great to have out there at that point. But to walk around the street with it, or to walk in my house with my vision goggle on, and what am I doing this? And my friends should come over and get disoriented, and they'll go, wow, it's wonderful. My $3,500 out the window, and Meta throwing all that money. I'm not sure that he's on the right path, Zuckerberg, with that. Never thought. But I do believe he's on the right path, spending this money on the AI. I think that is a smart move, and I think he'll get a marketplace area there that gives him a serious advantage. But it's not the stock to be in right now. You've lost the embedded reading. You're in a corrective phase in the market. I covered this in so much more in the mornings. Now, I changed the time of my morning futures an hour later permanently. It's now going to be 6 a.m., not 5. I polled all my subscribers. I got a huge amount of votes in, and it was over 10-1. They'd love it an hour later. So I thought maybe earlier was better all these years. They wanted an hour later. If I record at 6, they have it 6:30-ish. That's great time. 7:30 Eastern time, 4:30 out west, and Europe. Remember, the markets aren't open yet. The big boys haven't really done anything. It works in for them. So I think everyone likes that. And then at 9 o'clock, I do my ETFs. And I always wait a half hour on the ETFs after the market opens to do them. And the reason is you have exchange trades, you know that. So after hour trades take place. I want the market to adjust price to those trades. And they don't match them up. The market reopens and you can buy outside of the day's range, in fact. There's many things that can happen. Understand that can be in the after hours, all right? Some exchanges, I imagine some will count them, others don't. It depends what's going on. But I cover all these different areas, specific stocks, and I rotate, as you're seeing here, in those. Plus, your subscription allows you to write me directly and ask me questions, and often I'll make a private video for you, devote a certain amount of time to that every day, and my subscribers would tell you I respond. So the idea here, longer-term trades, we're still in NVIDIA from December and Amazon for probably now, 4 to 6 weeks minimum. You put these on, some of them you get out of earlier, some not. Market tells you what to do. So I trade, and I tell you to trade is how I do it, off the weekly and the daily charts, both in futures, spiders, and ETFs. So you put it together, and my job is to give you a game plan. Your job is, I have this idea. Oh, that's what he's saying. I get it. And I teach. That is important. I teach as you go. So iraepstein.com. You can click up here. You'll discover you can get these as low as a price of a Starbucks with your tip. And you're going to be in for a month to see, do you like it? Give it a try. iraepstein.com. I will talk to you all over the weekend. You go to the word research when you're there, by the way. Take care.